Hey everybody, it's Henry W. Steele, and this is the fourth video in the series I'm doing on chart reading, and I'm using the United States dollar Canadian dollar cross pair 4-hour chart just like before, and I will continue to do so to keep things nice and uniform. In the previous video I talked about the difference between volatility and momentum, and in a video that was not in this series but previously, not too long ago, I talked about the importance of momentum and what it tells us. If the increase happens at the beginning of a trend, like this right here, it indicates that it's going to continue. Or if the increase in momentum happens at the end of a trend like this, it tends to indicate that there's going to be exhaustion. And of course, nothing ever works 100% of the time, but it's just an indication that you can look out for. Now, price levels kind of give you some information in regards to the momentum increases also. They give you a little bit more information. If a momentum increase happens and it breaks through a price level at the beginning of the increase, that's very bullish or bearish, depending upon whether it's moving up or down. In this case, it's very, it's very bullish right here, as we have sideways move right here. We have a tiny top right there, and then we have an increase in momentum which closes above this top. So we have an increase in momentum that's at the beginning of the trend, which indicates higher, and we have a close above this previous top right there, which indicates higher. But this is a very minor top, so that's a very weak signal. We have another top right here that we closed above right here, which indicated a bullish move. Now, here's the thing. The momentum had increased here, and it had increased tremendously here. So this move right here was more than half done by the time it closed above and moved above this previous top right here, which is more important, obviously, than this one right here. So that's actually a much weaker signal. It's still a bit bullish because it's toward it's not at the absolute highest part of the momentum increase, but it's a little bit above the middle, which means it's not very bullish. If, let's say, this top right here had actually formed right around here, and this just barely closed above it, that would be basically neutral, be slightly bullish to neutral. If it closed right at the same levels, it would be neutral to bearish. And if this was not able to close, let's say this top right here was actually up here, and the momentum failed to close above it, that would be bearish. Okay, pretty simple actually. But it's a bit more information than just increased momentum at the beginning and the end of a trend. So this right here, if we just look at this, I'll put a price level here. This is actually the highest close price was right there, and then the highest price it was actually able to get to was right here. So this right here is the price rejection zone of this previous high right here, and we easily closed above that, but we had already moved more than half of the momentum at this point. So we would be able to tell that this is a bullish indication, but it's not very strong. So what we would expect from this is when the exhaustion happens and the market stops moving up, we would expect a retracement of normal magnitude, and then we would expect the market to move back up to roughly the same high, possibly a little bit higher. And we see that it moved a little bit higher right there. If we use this one, because we have an increase in momentum right here, and we have a highest close right there, and then the highest price reach right there. So this swing has its rejection zone right there, and this momentum was able to close above it, but just barely. Now the first thing we look at is this momentum happened at the end of a move, so that's indicating that this move is exhausted, this particular swing right there. But then this increase in momentum was only able to close just slightly above this resistance zone. So that's neutral right there. So we could expect the market to become exhausted, retrace a normal amount of retracement, and then maybe regain this high or this price area here. I wouldn't necessarily expect it to move higher. So we could get maybe like a double top right here. Now keep in mind, I'm not just talking about each consecutive swing. I'm talking about using a candle or a couple of candles that have an increase in momentum. Those are what we're looking for. Can't just use this kind of a candle, you know, there's a high volatility right here, relatively speaking, but it's very little momentum. So we're not looking at these candles, we're looking for actual high momentum candles, candles that have increased momentum of what had previously just happened. Now, looking at the previous swing is a minor indicator. If we go back in time, if we zoom out here, we see that there was a major swing top here, a major swing bottom there, there's a major swing bottom there. So if we look, we see that we're right in the price area of this previous major swing high. So let's look at that for a second. The highest level is right there, and then I'm going to add this one. This is the highest close. So this is the rejection zone of this major top. And excuse me. We see right here, we don't actually have any momentum candle indication that we're going to be breaking through this at this point in time. That doesn't mean we won't. The closest thing we have is this previous candle right here that was a momentum candle right there that just barely broke above here, and according to this top right here, this price level, this one indicates neutral. So we can't really expect too much more of a move higher in relation to this, but in relation to this major top rejection zone that's right up here, this momentum ended significantly below it, which is bearish. So this is actually an indication that we could be seeing the market maybe move sideways a little bit, and then possibly very soon continue to the downside. We could, or not continue to the downside, but actually reverse trend, and the major trend could be changing right around here. It doesn't mean that it's going to, but there's a higher probability of it due to the fact that our momentum, the momentous moves, or the moves that had an increase in momentum, could not break above this level and close above it. So that's about it for this video. I'll be talking about this a bit more as we move forward, about the momentum and the price levels of previous highs and lows, and we're definitely going to be keeping an eye on the market here to see what it does in relationship to this price level of the major high, the previous major high from back in late June. In the next video, tomorrow is Saturday, so I will not be doing one of the chart reading videos. I'll start those back up on next Monday, which will be December 3rd. But in that, in December 3rd's video, a chart reading, I'm going to talk about percentage levels and how we're going to start working with percentage levels, percentage levels of price moves. Okay, there we go. Sorry, my tongue is really twisted right now. So until Monday, I will talk to you later. I will probably release one more video tomorrow and possibly one on Sunday, but almost certainly one tomorrow, but not related to this series. So I will talk to you later.